So let's talk about interest-only loans. So these are loans where the borrower only repays the interest, okay? So they've got a loan out, but each month or fortnight, whatever, they only pay the bank the amount of interest that has been incurred during that time. They're only paying interest, okay? They're not reducing the amount that they owe at all. They are only paying back interest. So the payment that they are making is equal to the interest that has been charged or incurred. Now, why would you take out an interest-only loan? Well, various reasons. A lot of times people might take out an interest-only loan if they're going to make repairs on their house and then sell it. They just want to pay off the interest. I myself had a period of time when I had an interest-only loan because I was selling my first little flat and buying another place, and so I had a month where I had 2 mortgages, so that was too much for me to pay. So I only paid the interest on the 2 loans for that month. So that meant for that month I wasn't actually reducing the principal at all. I was only paying the interest that I owed. Okay, so let's do an example. Tyson borrows $100,000 for repairs and updating his house. He takes an interest-only loan at 7.2% per annum, compounding monthly. So what are Tyson's monthly repayments? There's a couple of ways to work this out. You can go, well, it's 7.2% per annum, compounding monthly, so divided by 12, so that's 0.6% per month. So $100,000 times by 0.006, which is 0.6%, is $600. So he'll be paying $600 per month. So that $600 is the interest that is being incurred on that loan, and Tyson is only going to be paying that amount. That means at the start of the month, he owes $100,000, and at the end of the month, he still owes $100,000. Now, you can also do it on the finance solver. So I just like to sometimes do it for 1 month. Just look at it with the 7.2%. He's borrowed $100,000. At the end of the month, he's still going to owe $100,000 because we've not made any payment. Sorry, we're not reducing that principal at all. So that payment is equivalent to the interest. So, how much does Tyson owe after 12 months? Well, as Tyson's not paid any money off the principal, he's still going to owe $100,000. He's not paying anything off the principal. He's only paying the interest. So his loan isn't growing, but it's not decreasing either. So if he did it on the finance solver, you can see here 12 months, 7.2% per annum, starting with $100,000, making a payment of $600, he still owes $100,000. Okay, so this is for interest only. So this is from the 2018 Northern Hemisphere Exam 2. This was question 9 from that module. Andrew will also join Rosalind and Richard on the holiday. Andrew has borrowed $10,000 to pay for the holiday and other expenses. Interest on this loan will be charged at the rate of 12.9% per annum, compounding monthly. Immediately after the interest has been charged each month, Andrew will make a repayment. For the first year of this loan, Andrew will make interest-only repayments each month. What is the value of each interest-only repayment? Okay, so a few ways you can work it out. You can go, okay, let's get here. So what was it? It was 12.9% per annum, compounding monthly. So that means it's 1.075% per month, and he's borrowed 10,000. So 0.01075. So that's $107.50. Please remember, you must write any money to 2 decimal places. I know I say that every time, but you have to do it. Now, the other way is, of course, on your finance solver. Okay, now you can put in however months you want, but let's go 12, and that is 12.9. He's borrowed, so positive 10,000 tab. We don't know what the payment is at the end. He still owes $10,000. That's why that's negative. It's 12 payment periods per year. And then hit enter. You can see, yep, he pays $107.50 per month. Okay, so that's for the first year. For the next 3 years of this loan, Andrew will make equal monthly repayments. After these 3 years, the balance of Andrew's loan will be $3,776.15. What amount in dollars will Andrew repay each month during these 3 years? Okay, so let's bring up this. Okay, so at the 3 years, so 3 years by monthly repayments, we've still got the same interest rate. We borrowed $10,000. We don't know how much we're paying, and at the end of 3 years, we owe $3,776.15. So then if we go and enter, so that is $250. And yes, that's correct, looking at the examiner's report. Okay, next one. Andrew will fully repay the outstanding balance of $3,776.15 with a further 12 monthly repayments. So just double checking, fully repay means at the end he's going to owe $0. Okay. So the first 11 repayments will each be $330. That 12th repayment will have a different value to ensure the loan is repaid exactly to the nearest cent. What is the value of your 12th repayment? Round your answer to the nearest cent. Okay, so let's get this calculator again. So now, let's start off with our starting position. we still owe $3,776.15. Remembering that's positive because although we owe the bank that money, it's under our control. We are making payments of $330, so that's negative. Now, at the moment, let's just look at those 11 months where he's making those payments. Okay, so at the end of 11 months, he still owes $415.93. I'm just writing that down. Of 11 months owes $415.93. Okay, but we're wanting to know the value of that 12th repayment. Okay, so let's have a look now what's happening for 1 month. For 1 month, we still owe $415.93. And at the end, we're going to owe $0. So our payment is going to be $420.40. Yes, that's correct. Okay. So, oops. Last payment. $420.40. Okay, so that's the way you can be doing that. So the thing to remember about interest-only loans is that repayment is always equal to the interest earned. Okay? Repayment equal to interest incurred. So for this question, that's why we could have just worked it out by figuring out, well, how much interest was incurred for that month. And it was $107.50, so that was the payment that we made.